Hey guys, it's Adrian here, the Canadian in a t-shirt, and today I'll be breaking down how to transfer money and investments between your different accounts in Questrade. I'll provide a step-by-step walkthrough on how to perform cash and in-kind transfers between your Margin, TFSA, and RRSP accounts with Questrade. And I'll give you guys some tips and warnings to avoid any unnecessary fees and taxes. As you guys already know, Questrade is my favorite online broker in Canada for many reasons, including its low fees, its ability to hold both Canadian and US dollars, and being able to convert between them almost for free using Norbert's Gambit. And on top of that, Questrade makes it really easy to transfer money and stocks between your TFSA, RRSP, and Margin accounts. This is a huge benefit, and a lot of brokers either don't allow this or are severely restricted like Wealthsimple. If you want to learn all the reasons why I prefer Questrade and to get started investing with them, click the pop-up at the top right to watch my step-by-step tutorial on how to open a Questrade account. For this video, I'm going to assume that you already have a Questrade account set up. First of all, why should we even bother transferring between accounts? Well, we do this to maximize our tax efficiency and minimize our tax bill. In Canada, there are many different types of investing accounts, like the TFSA, RRSP, RESP, and Margin or non-registered account, and each of these have different rules and benefits when it comes to taxes. Holding an investment in one type of account over another can save you thousands of dollars a year in taxes. So it's so important to understand how each one of these work and to have an investing strategy for each account. Luckily, I've already made videos on each of these types of accounts, so make sure you check out my Canadian tax guide to learn how they work and how to invest in each type of account to minimize your tax bill and maximize your long-term growth. Here are some very common examples that can save you a ton of money. Let's say that you opened up a TFSA account expecting it to be tax-free, but surprise, US dividends are not tax-free in a TFSA. The dividends from US stocks and ETFs will be charged a 15% US withholding tax in a TFSA, and you can't avoid it. Those taxes are paid out immediately when you receive the dividend. Instead, if you held those same US dividend stocks in an RRSP, those dividends would be tax-free. That's why I always suggest to hold US dividends in your RRSP instead of your TFSA to avoid these US taxes. I talk about these US withholding taxes in greater detail in my TFSA and RRSP videos, so check them out. But if you didn't know this rule and you already bought US dividends in your TFSA, what can you do? I get this question all the time, but luckily, Questrade allows you to transfer whatever stocks you want from your TFSA into your RRSP. You won't be paying any commission fees or selling them at a loss or anything like that. It's just a transfer. You'll still own the exact same shares. They'll just be moved from your TFSA into your RRSP, and now those dividends will be totally tax-free. But note, this will count as a TFSA withdrawal and it will count as an RRSP contribution, so make sure you have available room. I'll get back to this point later in the video. Here's another example. Let's say you've maxed out your TFSA, but you want to keep investing. You don't want to be sitting with a huge pile of cash just sitting there collecting dust. So you start investing in your Margin account. There are no limits at all with a Margin account. You can put in as much money as you want, but any profits you make will be taxed, either capital gains or dividends. That's why I always recommend maxing out your TFSA and other tax-sheltered accounts before you start investing heavily in your Margin account. So you've maxed out your TFSA and you're investing in your Margin account. Now, months go by and January 1st hits. It's a new year, and so now you've just gained an additional $6,000 of TFSA contribution room. Ideally, you want to max this out as soon as possible to enjoy tax-sheltered growth, but all your money is already tied up in stocks in your Margin account. Those stocks are growing fine in your Margin account, but any profits you make are being taxed, and you have $6,000 of tax shelter room just waiting for you. So you can slowly save up money week by week and contribute to your TFSA when you can, or you can transfer $6,000 worth of stocks from your Margin account into your TFSA right away, and now those stocks will be growing tax-free. Again, this will count as a TFSA contribution, and there might be some tax implications if your stocks grew in value. I'll get to these warnings in just a bit, but I wanted to highlight these two examples to show you the benefits of transferring between accounts. It's a super useful feature that can save you a lot of time and money. I want to reiterate one thing. All the strategies in this video are regarding transfers between accounts, but all within Questrade. If you're looking to transfer money from your bank or another broker into Questrade, I already have a whole video on how to do that. And if you don't have a Questrade account, click my referral link in the box below and you'll get $50 in commission-free trade rebates for the first 30 days when you sign up. That saves you $50, plus I'll get a small referral bonus as well. So once you're in Questrade, you can transfer cash or stocks or ETFs between any combination of accounts. But for most Canadians, these are the transfers that are most useful. TFSA to RRSP to avoid withholding taxes on US dividends, and margin to TFSA, margin to RRSP, and margin to RESP to maximize your tax-sheltered growth. All the other types of transfers don't provide much value, and some can even cost you a lot of money if you're not careful. For all these transfers, you have two options. You can either transfer cash, or you can transfer shares of a stock or an ETF. I'll walk you through both of these at the end of the video, but this is an important point. Transferring cash is easy. If you have $1,000 in your margin account, you just say, I want to transfer $1,000 cash into my TFSA account. But when you're transferring stocks, you don't say, I want to transfer $1,000 worth of stocks. Stocks change in value every minute of every day, so you can't specify a dollar amount. Instead, you have to specify how many shares you want to transfer. So if you want to transfer 10 shares and each share costs $100, you're transferring $1,000 worth of stocks, but you can't control the price. If by the end of the day, the stocks have gone up to $110, you're still transferring 10 shares, but now you're transferring $1,100 worth of stocks. That's why I suggest waiting until the market closes at 4 p.m. Eastern Time before you request a transfer. That way, the stock price is locked in, and you'll know exactly how much money you're moving over. Technically, when you transfer stocks, you can indicate which share price you want to use to calculate the market value of the transfer. You can either use the highest price of the day, the lowest price of the day, or the default option, the closing price at the end of the day. I always recommend to use the closing price, but you do have that choice. And later, I'll show you how to make that choice on Questrade. This matters because it will affect things like your contribution room. As I mentioned in my previous examples, if you're transferring money into a registered account, like a TFSA or an RRSP, that transfer will be treated the exact same way as a contribution, since you're putting money into the account. Again, cash transfers are simple. If you transfer $1,000 into your TFSA, that's a $1,000 contribution. If you're transferring stocks in your TFSA, your contribution will be the market value of those stocks on the day of the transfer request. Again, I suggest to use the closing price to calculate this contribution, but you can also choose to use the high of the day or the low of the day. I've said this before, but when it comes to your TFSA and your RRSP, make sure you record every time you make a contribution or a withdrawal. It's your responsibility to know how much contribution room you have left. The CRA will only tell you this number once per year. The rest of the year, it's on you to keep track of this. And make sure you do not exceed your contribution limits. You'll be charged very steep penalties of 1% every month, which is huge. So when you're transferring, wait until you know the closing price to avoid any surprises and to ensure that you don't exceed your limit. What happens when you're transferring US dollars? The CRA will always look at the Canadian dollar equivalent on the day of the transfer. So you can transfer cash as US dollars, and you can transfer shares of US stocks and US ETFs. Everything is the same, except that the CRA will consider the Canadian dollar amount of this transfer, so be extra careful with your contribution limits. If you only have $1,000 worth of TFSA room and you transfer in $1,000 US dollars into your TFSA, you've just exceeded your limit, since $1,000 US dollars is about $1,200 Canadian. Be very careful with this. My advice is whenever you're dealing with a US dollar contribution, withdrawal, or transfer, record these three things: the US dollar price, the exchange rate from the Bank of Canada on that day, and the equivalent Canadian dollar amount. That way, you'll have all your bases covered if an issue ever comes up. Transferring between accounts is super easy, and Questrade won't charge you any fees, but there are a few situations where a transfer will be taxed. A margin account is a non-registered account in Questrade, so every time you earn a profit, you'll have to pay taxes on that profit. So if you collect a dividend, that's taxed. And if your stock goes up in value and you sell it for more than you bought it for, you've just made a profit called a capital gain. And in a margin account, capital gains are taxed. However, in a TFSA, RRSP, or other tax-sheltered account, you don't pay taxes on these capital gains. So what happens if I transfer my stocks from my margin account into a tax-free account like a TFSA? Unfortunately, you might have to pay some taxes with this transfer if your stocks have increased in value. When you transfer investments from a margin account into a tax-sheltered account, it's treated as if you sold those stocks first and then transferred them into the tax-free account. And so on the day of the transfer, if your stocks are worth more than you bought it for, that transfer is treated like a sale. And so you will have to pay capital gains tax on this profit. So let's say you bought $1,000 worth of stocks in your margin account, and now months later, they're worth $1,300. If you transfer them into your TFSA, it will be taxed like a sale. And so you'll have to pay taxes on the $300 of capital gains. The good news is that now those stocks are inside your TFSA, and so for the rest of time, you'll never have to pay any taxes on dividends or capital gains. So it's a balancing act. In the short term, your tax bill will increase, but in the long term, all future income from these stocks will be tax-free. Remember, this capital gains tax only applies when you're transferring out of a margin account. So margin to TFSA, margin to RRSP, or margin to RESP. Transferring from a TFSA into an RRSP is tax-free, since both accounts are already tax-sheltered. But what if your stocks have gone down in value? You only pay taxes on profits, not on losses. So if your stocks have gone down in value and you sell them for a loss, you now have a capital loss. And you can use this capital loss to reduce your tax bill by offsetting any capital gains that you made that year. But when it comes to transferring at a loss, you don't get this benefit, and it does seem a little unfair. If you transfer stocks at a profit, it's treated as if you sold them for a profit, and so you have to pay taxes on that gain. But if you transfer stocks at a loss, there's no tax benefit. It's not treated like a capital loss. I talk about this in greater detail in my year-end tax saving tips, so make sure you check that out. But here is my rule of thumb when transferring a losing stock from your margin to your TFSA or RRSP account. If this stock is currently down, but you intend to hold on to it, then do a transfer. You won't get to reduce your taxes, but you won't get charged any taxes either. And after the transfer, those stocks can now recover and grow tax-free. But if you don't intend to keep this losing stock, then sell it for cash and then do a cash transfer into your TFSA or RRSP. Now you can use that cash to buy a better stock, and since you sold for a loss, you can now claim that capital loss to reduce your tax bill. Remember at the beginning, I said that there are only a few transfers that are actually useful for most Canadians. TFSA to RRSP makes sense to avoid withholding taxes on US dividends, and transferring from your margin account to your TFSA, RRSP, or RESP allows you to maximize your tax shelter growth. Those are great, but what you don't want to do is any kind of transfer out of your RRSP. Please avoid this. If you transfer out of an RRSP, it's considered an RRSP withdrawal, which should only be done when you're retired. I've already made a whole video on how RRSP withdrawals work, but here's the short version. If you transfer out of your RRSP, whatever amount you transferred, that withdrawal will be fully taxed as regular income. And if you're in a high tax bracket, you're looking at a 40% tax bill. And a big part of these taxes will be paid out immediately at the time of the transfer or withdrawal. These are called RRSP withholding taxes, which could be an immediate tax of up to 30%, which you have to pay right away. Worst of all, when you withdraw out of your RRSP, that contribution room is gone forever. You are never getting it back. With a TFSA, when you withdraw $1,000, next year you regain that $1,000 worth of contribution room. But with RRSP withdrawals, that contribution room is gone forever. So please don't make this mistake and accidentally transfer out of your RRSP. Transferring from your TFSA into your RRSP makes sense if you have US dividends, but the reverse will not help you, and it will cost you a lot of money, so please keep that in mind. So those are all the rules and benefits of transferring between accounts in Questrade. Now, let's see how you actually do it. So I've logged into Questrade, this is the main homepage, and you can see here that I have 3 Questrade accounts, a TFSA, an RRSP, and a margin account. But for this tutorial, I'm only going to be transferring between my margin account and my TFSA. So to perform a transfer, go to the Request tab, and you'll see 2 options. Transfer funds is for transferring cash between accounts, and transfer investments is for transferring stocks and ETFs. But we'll start with transfer funds. And this is very self-explanatory. Here is where you submit a new transfer request, and here you can see a history of past requests. You can see that 2 days ago, I did a cash transfer of $2 from my margin account into my TFSA account, and within 1 to 2 business days, the cash was transferred. But we'll start a new request together, and we'll do a cash transfer from my margin account into my TFSA account. Again, this is very simple, so from, we select my margin account, and to, we select my TFSA account. Now we specify the amount of cash to transfer. So I'm going to transfer $3, and for currency, I'm going to choose Canadian. Before I hit submit, I need to record this as a TFSA contribution. This is so important. It is my responsibility to know how much TFSA contribution room I have at any moment. I'm just going to make a text file recording that I made a TFSA contribution on this date, and the contribution was $3. So we click submit, we confirm the details, so I'm transferring $3 from my margin account into my TFSA account, click confirm. Okay, so the request has been received, and I can check the status by going to the request history, and here you can see the new cash transfer being processed. And if I want to cancel this transfer, I can click this icon right here. Okay, so that's how you do a cash transfer. Now let's do a stock transfer. So we go to Requests and we select Transfer Investments. This page is very similar and we do the same thing. We start off by saying which account we're transferring from. So we're moving from our margin account and we're moving to our TFSA account. Now, we don't set a dollar amount, we specify which stocks to transfer and how many shares to transfer. So we click the symbol field and it'll bring down a drop-down list where we can search through all of our available stocks and ETFs in that account. I'm going to search for XEI. It's a Canadian dividend ETF. And I'll transfer over 1 share. Before I submit, it's important to know the closing price of this stock, since I need to know how much contribution room I'm going to be using for this transfer. So let's look up the share price. So we click on Trade, and we look up xei.to. So you can see here the stock price, and since I waited until the markets closed at 4 p.m. Eastern Time, this is the closing price. I recommend waiting and using this closing price because now there's no surprises. The stock price is not going to change until the next business day. So let's make a note of this. XEI closing price, $23.26. So let's go back to my accounts and transfer request. Remember, I'm transferring 1 share of XEI from my margin account into my TFSA, and I have the closing price of $23.26. So my TFSA contribution is going to be exactly that. So let's record it. So we click Submit. Now we confirm the details. So the request has been received. I can go to Request History to check the status of the transfer. And in 1 or 2 business days, the transfer will be complete. As before, I can cancel this transfer, but what I do want to show you guys is the Add Comment feature. This is how you specify what share price to use when you calculate the market value of the transfer. So we click Add Comment, and so we can choose. We can use the high of day price or the low of day price, but we're going to use the closing price of $23.26. We click Add Comment, and now we know exactly how much of a TFSA contribution we're making. And that's it. Now I just have to wait 1 or 2 business days and that ETF will show up in my TFSA account. So there you have it. That's how you transfer cash and investments between different accounts in Questrade. Make sure you check out my other Questrade tutorials for a step-by-step guide on how to actually buy stocks, how to invest in the US market, how to open an account, and how to transfer from your bank into Questrade. Again, if you want to get started with Questrade, click my referral link in the box below and you'll get $50 in commission-free trade rebates for the first 30 days when you sign up. That basically means that your first 10 stock trades will be commission-free. That saves you $50, plus I'll get a small referral bonus as well. Thanks for watching, guys, and be sure to like, comment, and subscribe if you found this video helpful. Every thumbs up and comment really does help me build this channel on YouTube, and hit that bell icon to be notified of my new videos. And if you'd like to follow me on Instagram or Facebook at CanadianTShirt, click the link in the box below or click the links on my homepage. Thanks everyone, and I'll see you guys on the next episode of the Canadian in a T-Shirt. Bye guys.